Welcome to ShortView Trading. This is your morning market hit for Tuesday, 16th of March. What matters today for traders? Well, as we were discussing yesterday, it's a big week. It's a key decision week. We've got the Fed looming as of tomorrow, 6 p.m. London time, followed by a press conference from Jerome Powell. The key question on everyone's lips is, will he follow the lead of the ECB? Will he talk about containing bond yields, upping purchases, or anything like that? Controlling those yields, of course, is seen as so important to where the market goes from here. And of course, it's not just the Fed that's part of this big week. We've also got some key asset prices and important resistance levels. The S&P 500, as I mentioned yesterday, trying to push through its intraday highs from mid-Feb with a little bit of strength over the past 24 hours, but not as of yet convincingly through them. Equally, the same could be said of 10-year bond yields around that 160 yield level, pushing a little bit above that, as you can see from the chart in front of you now. But it's not just those two key asset prices that are important. Tech is also interesting. And of course, tech has been rallying quite sharply over the last 6 or 7 trading sessions, rallying from deeply oversold levels. And indeed, the chatter on tech's gone slightly quiet, given where we were just 2, 3, 4 weeks ago when the market was falling sharply out of bed. The index was under an enormous amount of pressure. And the price action across various key banner names in the tech sector was really dramatically poor and dramatically to the downside. So since sort of 5th, 6th March, when the tech was finding its lows, we've had a sharp rally in a number of stocks and the index in aggregate. But of course, what's interesting now in terms of key levels is the NASDAQ 100 is approaching various key resistance levels. Its 50-day moving average at around 13,150. Its Fibonacci 61.8% retracement level around 13,240. And then on top of that, around 13,350 intraday highs from the back end of Feb, early March. So there's a 200-point cluster range of pretty serious resistance levels coming up during a key decision week for the Fed, at a time when a lot of our short-term market timing models have moved back on to sell, having been on buy 7, 8, 9, 10 trading sessions ago. And also at a time when you've seen a lot of put covering, a lot of unwinding of put positions in the tech sector, as you can see from the chart in front of you now, over recent trading sessions. So wind back 10 days ago, the put to call ratio was generating in the NASDAQ a very chunky buy signal. Now you've seen, as I say, a lot of covering of put options that are outstanding. So a lot of removal of that downside put protection that means the tech sector is arguably vulnerable once again to the downside. So as such, all those buy signals we had on tech 10 days ago have eased, have turned to sell signals, or have dissipated somewhat in terms of the strength of their signal. And with that, of course, we're back at key resistance level in the tech index. So to see how we're playing this, please see today's daily rag, where we outline and update all our 1 to 2 week market timing models. We give specific 1 to 2 week recommendations on equity index futures, and we talk about the shape of the market and the behavior of the global stock market each and every morning. And if you're interested in subscribing to the Daily Rag or finding out more, please click on the link below where you can find out more information, or subscribe, or sign up for a 7-day free trial. All you need to do is enter your name and email address. We'll send you the rag for free for 7 trading sessions. No credit card details required. So what are we watching today? Well, primarily US macro data, retail sales, NAHB home builders index will be of critical interest, both of those data points interesting. Other than that, fairly light across the globe. ZEW survey is out in the Eurozone as well. So that's it from us. That's your morning market hit for Tuesday, 16th of March. Please do subscribe to these free videos. Simply search under ShortView Trading and click the subscribe button, or follow us on LinkedIn, Twitter, and/or Facebook. Thank you for listening. Stay safe. Trade well.